Before today's markets close, you'll discover which emerging trends top experts believe could reshape your investment strategies.
Absolutely. Our analysts have streamlined hours of analysis into a concise, action-driven format.
We will explore key predictions for Bitcoin and Ethereum's performance in 2025 and strategies to navigate market chaos.
And do not forget, this content is for educational purposes and not investment advice.
Stay tuned, as right after this, we will dive into why the crypto market is making headlines today with our upcoming segment titled Warning: The Actual Reason Crypto is Crashing Today. In today's segment, we explore why Bitcoin's price is crashing below $100,000 and what broader trends are at play.
Our analysts provide clarity on the Federal Reserve's recent decisions and the implications for risk assets. The Federal Reserve's decision to cut rates by 0.25 percentage point is a double-edged sword for Bitcoin holders.
Their projections for slower rate decreases in the coming years caught many off guard.
Our analysts note that the Federal Reserve's new outlook suggests a stronger economy requiring fewer rate cuts than anticipated.
So, could this mean that we might see prolonged uncertainty in crypto pricing due to these decisions?
Interestingly, Bitcoin's dip is being categorized by some as a mere pullback rather than a full trend reversal.
Exactly. It is essential to keep the broader context in mind. Significant corrections happen even in bullish cycles.
So, in this age of digital information, how much credit should we give to media reporting on these declines?
Great question. Analysts emphasize that media can create exaggerated fears, particularly after dramatic price dips.
Looking ahead, analysts suggest that while turbulence is expected, the outlook for Bitcoin could remain favorable.
However, knowing that Bitcoin could briefly drop as low as $70,000 raises questions about investor confidence. The potential for some altcoins to soar while others fade highlights the need for discernment in project selection.
It sounds like due diligence is more important now than ever.
In conclusion, our analysts outline the importance of maintaining a level head amidst market volatility.
Staying informed and adaptable will equip investors to navigate these uncertain waters.
In today's episode of Crypto Banter, we tackle the first real crypto correction we've seen in 6 months, diving into what's affecting Bitcoin and altcoins.
This context sets the stage for understanding market dynamics and investor sentiment amidst fluctuations.
As highlighted, Bitcoin's minor correction contrasts starkly with the carnage happening among altcoins.
Indeed, it appears Bitcoin is acting as a safe haven for many traders, while altcoins are getting crushed, showcasing a flight to quality.
This correction feels historic, akin to previous cycles where altcoins bore the brunt of market fears.
That's right. It really showcases how corrections can act as a psychological reset for traders.
With this correction underway, the host emphasizes maintaining liquidity and making strategic buys.
Dollar cost averaging really seems prudent. It lets investors take advantage of lower prices without going all in too early.
The Fear and Greed Index shows we're still in fear territory, but that could mean it's a buying opportunity.
Exactly. Often when traders are scared, that's when you find the best deals.
The host seems to expect some instability in the next week as traders reassess their positions.
But with strategies like dollar cost averaging, there's hope for steady recovery down the line.
This shift could signify a renewed focus on foundational projects that offer real value.
It's a market where fundamentals are likely to become increasingly important.
To wrap up, it's all about strategy and leveraging the right opportunities during these volatile times.
Exactly. Traders must remain flexible and prepared to act based on market signals.
An analyst dives into the chaotic crypto scene, revisiting key price fluctuations and market sentiments.
The analysis emphasizes the importance of understanding current trends and technical signals as pressures build. The analysis outlines that Bitcoin's current price levels, like $92,000, represent vital support points that must hold.
Losing these key levels could indicate deeper bearish trends.
There is a highlighted substantial $1 billion liquidated recently, causing alarm across investor circles.
Do those liquidations spark a deeper panic, or are they a part of the natural cycle?
It's noted that Bitcoin's critical price stability around $92,000 is essential for the market's health.
Watching these levels closely, can provide a roadmap for potential recovery.
There is an emphasis on the strange mix of fear and opportunity that often accompanies market downturns.
Is now the time for savvy investors to capitalize on dips, or should they wait?
A theory is presented that a bullish trend could emerge if current support levels hold and macro conditions improve.
But if those levels break, the current downtrend suggests we might see further corrections.
It is suggested that many are likely reassessing their risk tolerance and investment approaches.
So is it time to move funds into something more stable?
The insights champion the need for clarity and patience in navigating today's turbulent markets.
In times of uncertainty, reflecting on fundamentals and technical signals can provide valuable direction.
Welcome back. An analyst dives into the chaos of the crypto market, analyzing today's shock with over $1 billion liquidated.
The insights reveal key factors driving the current panic and the potential silver linings amidst the volatility. It's asserted that such days of shakeout can be part of a market reset, paving the way for future recoveries.
There is still hope for a year-end rally, encouraging viewers not to panic.
Much of the day's chaos is attributed to fears around an impending government shutdown tied to a convoluted funding bill.
Would clearer communication from lawmakers help stabilize markets?
This temporary dip could set the stage for a recovery, especially given historical patterns favoring year-end rallies.
Right? And should investors be actively accumulating during these dips? Viewers are encouraged to view these dips as gifts, emphasizing that seasoned investors often leverage such moments.
Indeed, wise accumulation in these tough times could lead to favorable outcomes ahead.
An analysis highlights the fluctuating patterns of Bitcoin dominance as crucial in understanding the cryptocurrency market's direction.
This examination considers past cycles to predict future trends, particularly around the upcoming halving event in 2025. Historical price movements can serve as indicators for future dominance shifts.
Bitcoin's dominance often aligns with broader financial trends, such as the onset of quantitative easing.
Historical peaks in dominance are often precursors to market transitions.
Should we be cautious leading up to those peaks?
Quantitative easing can shift the entire financial landscape, impacting how investors view crypto assets.
Investors often react similarly during such economic policy implementations. The unpredictable nature of trader psychology can lead to sudden shifts in dominance.
If history shows trends, how much faith should we put in market predictions?
A possible peak in Bitcoin dominance may coincide with quantitative easing announcements.
However, if conditions change negatively, we could see a reversal. The outcome largely hinges on how investors react in uncertain times.
It's more about what people think is going to happen than actual market performance.
These insights are essential for crypto investors looking to navigate the complexities of Bitcoin dominance.
With unpredictable market shifts ahead, adaptability and insight could prove vital for success.
What an enlightening discussion we had today about the current state of the cryptocurrency market.
Indeed, each guest brought valuable insights. Dr. Cowan particularly highlighted Bitcoin's dominance and its relationship with market cycles.
And George really emphasized resilience within the market, despite recent dips, a crucial point amid panic.
Absolutely. Lark and the team from Altcoin Daily also reflected on investor strategies during this volatility, which is vital to understand.
It's fascinating to see their differing views on the Federal Reserve's impact. Dr. Cowan looks at larger cycles, while the Altcoin Daily team zooms in on specific policy actions.
That's right, and differing perspectives on psychological impacts during downturns further enrich this dialogue.
So what can our viewers take away from all this?
Firstly, stay informed about market cycles and institutional buying trends. They're your allies even in turbulent times.
And maintain an optimistic outlook towards long-term gains, despite the noise of short-term volatility.
If you found today's insights valuable, please like this video, subscribe, and share it with others who could benefit.
Your engagement allows us to continue delivering expert analyses directly to you.
Don't miss our next episode where we will explore different aspects of NFT markets. There's plenty of excitement there.